Have you heard that HEX is not correlated with Bitcoin or Ethereum? Well, have you ever run the numbers? And do you know that they are correlated? We're going to get into that in this video. But first, let's understand why correlation might matter to a few of the people watching. Most people are not going to care. If somebody is building a portfolio of assets and you have another asset that you want to add to that portfolio that has a correlation that is different, the lower the better, excuse me, when you add an asset to your portfolio with a low correlation in terms of the returns or the prices in the portfolio, then you get a diversification benefit, right? So you can reduce the risk in the overall portfolio by adding uncorrelated or lower than one correlation most of the time to a portfolio. And that got me interested in actually exploring this. When I ran the numbers, they were pretty freaking interesting. So, with that being said, if this is your first time here, what's good? My name is Sam. For those of you who are returning, it's good to freaking see you. Now, let's get into the video. By the way, if this is your second time here and you haven't already pressed the like button or subscribed, what's good, bro? Why haven't you done that? There's also some links down below if you want to support the channel. Now, what do we have here? So what I did is pulled the data from Yahoo Finance from the 1st of January 2020 for all of these respectively. SPY is the ETF for, it's basically like a mutual fund kind of thing for the S&P 500. And then for ETH and BTC to understand what their correlation is and their prices. And when you run the numbers, I was like, oh, wow, check this out. 60% of the time, or one way to think about this is like if HEX goes up by 1%, then BTC would go up by 60% of 1%, right? And you see these, you're like, holy shit, this is far more correlated than I thought it was. Another interesting thing to note here is that depending on the time period you look at, the correlation differs. So this is the overall period. This is 2020, and this is 2021 here. I just didn't pull it out for 2022, but you get to see from 2020 to 2021, there is an increase in the correlation from 0.49% or 0.49 to 0.54. Same thing here, it doubled with Ethereum, and this is also super interesting. I was like, why does HEX have a high correlation with SPY? Right? That's a legacy stock market. But do correlations in prices really matter for people? No, they don't. Because what really matters is returns. So when you look at HEX and you calculate the daily returns in the price for HEX and Ethereum, you get a completely different story. And then I'm going to show you some more data in a second here. So that's what this is down here at the bottom. We get to see, this is the overall time period, a 0.1899, so 0.19 roughly. And you're like, okay, that's interesting. They're positively correlated slightly. And then ETH, right? They're positively correlated slightly here. But if you look at in statistics, you can run a test. If you remember back in school, like there's an Altman Z score, or like there's the p-values and a t-test and a single-sided test and a double-sided test, and you can test the correlation to see if it's statistically significantly different from each other, right? And things like this. So you can do all that fancy shit, right? But we have most of the population set here to understand if this is different. And there's only about 3 weeks worth of data that's missing. This is pretty low. So if you were looking in, say, the finance world, you would say that this is very low or almost insignificant because it is so low. If you have the expected returns of BTC, or if you have the expected returns of HEX, and you have a portfolio, you can add something into your portfolio with a correlation of 0.21 or 0.19 with a higher expected return than your portfolio. What does that mean? What does that mean in English? Well, you've got two things to look at. You have risk, and then you have, let's just call this ER for expected return, right? So you have the risk of the portfolio, and then you have the expected return of the portfolio. If you're able to add something like HEX to a portfolio that has BTC in it, and it has a correlation of 0.19, what does that mean? Well, that means that you get to reduce the risk in the portfolio, and in my opinion, in my calculations, the expected return of HEX is greater than the expected return of BTC. So you get to reduce the risk while increasing your returns. So like in the fitness community, there's a thing that a lot of people want. They would like to drop body fat and increase muscle mass. That would be kind of like the holy grail of something to achieve, right? Hey, can I drop body fat and put on muscle? Like that's like the people, like girls, hey, I want to drop body fat and I want to get toned, right? And dudes, hey, I want to put on muscle and I'd like to get a little leaner, right? That's like the holy grail when you have something with a very, very low, even though it's positive here, it's really insignificant. One thing to consider is that correlation changes over time. So I ran the numbers again, but used a rolling 90-day, right? So this is the rolling 90-day correlation between HEX and Bitcoin. It's because I'm a nerd and I enjoy this kind of stuff, right? And you get to see that the correlation changes over time, right? Up and down. This is the time when the government was like, F you, we're taking all your shit and your freedom, right? That was this period here. One thing to know about correlations is that anytime there's a black swan type of an event in a market or globally, assets of every nature increase in correlation. Meaning, if there's crazy shit happening, people always do the same type of shit independent of whatever assets they're holding. So if you have crazy stuff happening, people tend to do exactly the same type of stuff, meaning the prices move in conjunction with each other. And that's what we saw here, which is kind of interesting. It's also interesting to note that there is negative correlation, at least for a brief couple moments in time here and over here, maybe for a day, but this period here, where HEX was actually negatively correlated with BTC. Now, if you go back to, like, say, that thing we were talking about, risk and expected return, if you can add something to a portfolio that has a higher expected return with a negative correlation, wow. The diversification benefits from that would be tremendous, right? Because you're in portfolio management, they'll measure risk as one measure of risk is standard deviation. Another is the Sharpe ratio, right? Which would be like risk per unit of return type of thing. And that would be a really big driver. It would cause like a really big impact, right? It's hard to overstate like how much of an impact that would be unless you have context to understand that. So I did the same thing for Ethereum here, and hopefully you guys can see all this. Same exact thing. In parts of the chart here, it was negatively correlated. Yes, only briefly, but still, that's pretty significant. So if somebody's like, this is, and correlation changes over time. Like you can see this here when you look at 2020 versus 2021, 2022 probably may have actually increased. I didn't calculate it. We're only 4 months into 2022. The next, just because I enjoy looking at this kind of shit, was the HEX Bitcoin rolling 180 days. Now we're looking at like a 6-month rolling period throughout here. We get to see some of these spikes. Remember, this is like when the highest spike is when the government said F you, right? But even at a 6-month rolling, we see a little bit of negative correlation right here. Or actually, I'm sorry, this is down to 0.1. So there's no negative correlation on this one here. But almost one way to kind of think about this is like maybe, I mean, if you're adding something to your portfolio even below this number here is 0.4, like that would be awesome. If you were like, hey, my portfolio, this thing correlated with my portfolio is only 0.4, and you can add that to your portfolio. And because HEX has a higher expected return, in my opinion, that's generally a good move. Now, one thing that you do want to consider that we did not consider in this is the total returns, right? So this is just daily price action, right? That's what this is down here. Now, when you look at this and you consider the yield, right? Because people like HEX because it is perceived as safe and that there's a yield associated with it. And if you factor in the yield that is earned through this period of time, it is even better. So let me show you one more chart and then we'll wrap this up here. When we look at ETH, this is again HEX ETH over a rolling 180 days from the returns. So remember, prices, if you're checking the price correlation, that is not super significant. What is more significant is the returns, because that's what people actually give a shit about. When we look at the returns, and these charts are all returns here. So this chart here shows you that same thing with ETH, and it barely got above 40. So if you can add something to your portfolio with a correlation of 40, excluding the yield you earn, wow, you just absolutely destroyed it, right? That is something that's very good. And if you look over here, this is probably, I didn't have the dates on the bottom here, this is probably like the end of 2020, 2021 is probably in this time here, period here, where it actually was close to a 0 correlation with Ethereum, which is absolutely insane. So when you go through and you think about the correlation of HEX versus something else, you're not going to be looking at the price necessarily. You're going to be looking at the total return, and based on your expected return within that asset, because that's going to be far more valuable, especially if somebody's adding this to, say, a portfolio of stocks and bonds, or a portfolio of stocks, bonds, and real estate, or some other business holding in there. You have something that is not necessarily correlated, or very little correlation, depending on what it is, with that. So this is very, very interesting. If you found this very interesting, take a second, share this video with somebody else, so we can spread what is actually going on here, finding something with such low correlation with the BTC and Ethereum. I could run the numbers for SPY here and see what it actually is relative to SPY. It's the only difference is that with SPY, you have like 270 trading days a year, and with crypto, you have 365 trading days a year. This is like approximate, right? 270, 275, depending on how holidays and things fall throughout the year. So there's about 100 days more you can trade, or 100 additional data points you can get from crypto that you can't get with when you're comparing SPY, but I bet adding this to a portfolio, if there's any like portfolio managers or anything like that that actually consider this type of, it considers crypto, then this would be an absolute gold mine to add to a portfolio. So appreciate you guys. Don't forget to press the subscribe button. If you want to check out the other channel fitness related stuff, you can click the link somewhere around here or check the links down below. I appreciate you. Talk to you soon. Peace.